Forget market timing. For smart retirees and income-focused investors, the real goal isn't to beat the S&P, it's to beat the bills. That's where monthly dividend ETFs step in, offering dependable cash flow that mirrors a paycheck, not just an investment return. Leading the charge is JP Morgan's NASDAQ Equity Premium Income ETF, ticker code JEPQ, boasting an eye-popping 11.5% annual yield. Imagine earning nearly $9,600 every month on a $1 million portfolio without selling a single share. This isn't high-risk speculation. It's a strategy built on tech giants, covered calls, and income you can count on. Now let's dive into why JEP is in a league of its own. High yield usually signals high risk, but JEP defies that logic by tapping into one of the most powerful strategies available to income investors today: covered calls on high-growth tech. Here's the core idea. JEP holds mega-cap tech names like Microsoft, Apple, and NVIDIA, then sells options or calls on them to generate income. This limits the ETF's upside in explosive bull markets, but in a sideways or choppy market, like the one we're in now, that trade-off is often worth it. What makes JEP special is that it offers both exposure to fast-growing NASDAQ stocks and income 11 times higher than typical tech dividends. This isn't about chasing high-yield junk. It's about using volatility to manufacture cash flow from names that don't typically pay big dividends. Even more compelling? That 11.5% yield isn't an outlier. It's sustained. That means for someone seeking real, predictable income, GPQ can effectively replicate a private pension, backed by NASDAQ 100 assets, not high-risk junk bonds. But GPQ is just the tip of the iceberg. Monthly dividend ETFs aren't just for retirees. They're for any investor who values rhythm over risk, especially when market timing is out of the question. These ETFs do three crucial things. They smooth out cash flow, reduce panic selling, and eliminate forced liquidation. And while GPQ is the highest payer, others fill out a robust, diversified strategy. Think GPI, PEY, SPHD, and DGRW. Together, they form a complete tool set. It's not just about chasing the highest number, it's about matching structure to goals. So what's the takeaway here? Monthly dividend ETFs aren't about beating the market. They're about controlling your outcome. They offer a strategy over speed, income that buys you time. In volatile times, income is more than just a number. It's a buffer against bad decisions. JEP isn't the perfect solution for everyone, but in the context of these monthly dividend ETFs, it represents what modern income investing can be: flexible, powerful, and completely aligned with real-world retirement needs. If you're intrigued and want to explore more about JEPQ and other smart investing strategies, head over to www.wiseinvesting.com. Subscribe to our podcast and newsletter for more insights and tips on building a winning portfolio. Let's build wealth one step at a time.